Brian, good to have you this morning. Just try to characterize, if you could, what you're taking away from this latest run of earnings reports. I know you cover most of the kind of hard goods. Yesterday we got Best Buy, we got Dick's Sporting Goods. Is there a theme you can pull out of it at this point?
Yeah, well, thanks for having me. Look, I would say if I bottom line it, what we're seeing is a very mixed backdrop, but also not nearly, the disaster or, the pronounced weakness that others are calling for. I mean, there very much are still pockets of strength out there where the consumer is performing quite well. And I think, one clear example, and we heard this yesterday from Dick's Sporting Goods, is the sporting goods category. There's a place the consumer continues to spend well, and it seems like as though that will continue through the holiday season.
And when it comes to home improvement, we just got this pretty good, or at least better than expected, new home sales number. And home improvement retailers have been somewhat resilient given all that's been going on. What do we attribute that to, and can it continue?
Well, I'll answer the second part first. I think it does continue. That's another favorite spot of mine is this home improvement, so Home Depot and Lowe's. And look, I think what we're seeing happen there is it's a different consumer. I mean, generally speaking, the shopper at Home Depot and Lowe's is higher income, a homeowner. Okay, so in this environment, they're probably better off. They're less impacted by some of the inflationary pressures, gas prices, et cetera. But what we're seeing there, and I think this is a demographic shift that's happening, as the pandemic subsides, is that, even though we're now able to move around a lot more, we're maybe going back to our offices, we're traveling, we're still spending more time in our homes. And I think that is encouraging people to continue to undertake those home improvement projects, whatever they may be. And that's a big benefit for companies like Home Depot and Lowe's. You don't necessarily look at this as a holiday play. I mean, to some extent it is, but it's not but I do think that trend persists.
Well, Brian, from a sort of a broader perspective, though, assuming, as you said, that consumer demand has not been damaged as much as many might have anticipated coming into this earnings season, where do you think investors are best served, though, being focused right now in terms of where those dollars are going to be spent? Obviously, you've just talked about home improvement. Anything beyond that?
Yeah, look, I'll go back to sporting goods. And I looked, there's a lot of really high-quality companies in this sporting goods and this athleisure category. And I think names like, I mentioned quickly, Dick's Sporting Goods. Another retailer that's really under the radar for a lot of investors is Academy Sports, doing a great job in a repositioning there under a new management team. And then the big brands, Nike and Lululemon. And what we're seeing across this complex, if you will, is continued strength in consumer spending. I think these companies are managing well now inventory situations. But the other big positive when we think about inventory, and Dick's mentioned this yesterday, is that now that more product is flowing better, their supply chain constraints are really letting up. That's allowing these companies, both the retailers and the brands, to much better satiate underlying consumer demand.
You mentioned Nike, and I'm curious to what degree territories like China impact the model that otherwise would fit into a more North American consumer mindset. But there's these huge wild cards out there, aren't there, Brian?
I agree, Carl. Look, and so China is something we need to keep an eye on for Nike. It's a small part of their business, but a big part of the stock, if that makes sense. Now, I tend to think, it's always difficult for me, sitting here in the United States to evaluate what's happening in China. But, what we keep on hearing from Nike is that brand has never been stronger, continues to resonate well with the consumer. And the weakness we've seen in China over the last, few quarters or so has been largely transitory in nature, whether it relates to COVID, the lockdowns, or some supply chain constraints. So I think when the dust settles, Nike is still performing very well in China, and ultimately that's good for the stock price.